Welcome to our weekly market review. As per usual, it's brought to you by ETM Analytics and Treasury One. This week, as per usual, I'm also joined by currency strategist Andre Salia. Andre, another weekend, another Trump upheaval as he slapped his NATO fellows and EU peers with some punitive tariffs, most likely as a way to strong-arm them into negotiations to gain control of Greenland. EU obviously not happy, NATO partners not happy, and they have retaliated strongly. So definitely the end of the tariff war is nowhere in sight as Trump pushes forward with his agendas.
Yes, good morning. No, it's not at end, and it's not going to end anytime soon. The biggest thing here is actually the turmoil that it creates, NATO versus NATO, if I can term it that way.
Yes.
That's the biggest, this is the biggest problem, because from the outside, if you were in China, not part of NATO, if you were Russia, not part of NATO, and you look back towards this, then you must be sitting there with quite a smile on your face. And that's a problem. It's a problem from what their reactions can be, their future actions in terms of a Taiwan, Russian actions in terms of Ukraine and so forth, and other areas, so it is a problem, and it's not a problem that's going to go away, because if Mr. Trump has decided something, then he's decided something, and one way or another, he wants it. How it's going to look becomes an interesting one. Will it just be extended military powers and actions out of Greenland? Various options. And at the moment, it's just the strong arm tactics of, I'll make you pay to soften you up. But that's bad for economies, that's bad for companies, that's bad for continuity. So it's not a good way of playing it out, but it's clearly also sending a message to everybody else, apart from NATO, apart from Greenland here. It's sending a message of, toe the line with America, or else. Do as I want you to do, or else. Very bad way of managing relationships and economies going forward.
Yeah, and there's been a lot of discussion around what this could mean for NATO and NATO's future. And let's just be clear, there is no NATO without the US. So it's adding very interesting dynamics to this. And if you look at if you kind of pull the zoom lens back a little bit and you look at it from that framework between this US versus Russia power political play that's playing out at the moment, you can kind of start understanding the reasoning behind Trump's moves and why he wants to do it. I'm not saying I agree, but you start understanding. And he has been pushing Europe since he came into office to make a choice, because you either full-heartedly stand with the US or you're against them. And this is just, for me, another move of pushing them into a place where they kind of finally move out of the diplomatic kind of just using fancy words on a geopolitical scale into taking decisive action against China, for example. So my only concern with this is we know that Trump wants Greenland, and it's for strategic reasons, because it is an Arctic trade route. It's a very important route, a route that China and Russia has been pushing into for the last couple of years, and they've made some significant progress. The problem is Greenland is only one node of that trade route. So if you want strategic security in the Arctic, you're going to have to make friends with Canada and some of the other Nordic countries to really, kind of keep that security stance that he's pushing for. And what is happening right now is he is alienating a lot of those people that he's going to need on his side if he is moving into that strategic alliance. But nonetheless, the move was sent some wobbles through markets. I know US Treasury yield shot up a little bit. And a lot of that has also got to do with the stronger than expected jobless claims data that came out last week, right? Obviously, it just points to another of how resilient the US economy really is, including the labor market. And that's pushed out the first rate cut expectations out to July. Now, I know we are expecting the PCE information and data out this week, Andre, but do you think that could, have a potential of changing that forecast for now?
No, I don't actually think so. I think if you look at the figures, and especially the figures coming out now, we must remember that the figures being released is a bit strange in the sense that the closure of government has also had an impact on figures, and so the releases coming out now is almost backward look. It's back, not almost. It is backward looking towards October and November, and so it's not very clear as to what happens, and it's a bit old news. But the rate cuts so far by the Fed has been, I want to call it, fairly aggressive at a time when inflation was still close to the 3%. Now, it is subsiding, but slower than what is to be or was expected. And so I do think that there's not enough clear data and signs for Mr. Powell and his committee to immediately cut interest rates. The jobs data is also not that bad that it forces them to immediately cut. So I do think that the cuts is a little bit pushed out further into the year. It will happen, but a little bit later.
And that would be the case even if Powell isn't at the steer, as Trump is trying to do. So, yeah, I think they're just going to keep on focusing on the data for that. And speaking of which, 2026, it feels like the Rand has been riding on this wave of optimism. Is that continuing still, despite all the noise in the background going on globally?
I think that the Rand is riding the wave, and it's a very nice analogy, riding the wave. And we know what happens to a surfer. He falls off, he climbs up, and he rides the next one. And this is really almost what's happening to the Rand. If it gets a little bit of a hiccup, and we see this morning that there is a little bit of a hiccup, but it's just going to ride the wave further, because if you look, gold is up, commodities still doing well, Chinese growth a little bit better, so everything is actually still there. The momentum is there. It's really just a small little hiccup that comes into play. I think the time for emerging markets, the time for Africa is most probably looking a little bit better than in the past. That's where growth will take place. That's where demographically, there's growth in populations and so forth, and demand will be stimulated. So maybe things are just changing globally so much that it is maybe time for the emerging market space to have a little bit of a breather and doing a little bit better, and some emerging markets more so than others. And we've spoken about this many times before. We've got a central bank that manages our monetary policy extremely well. We have a Mr. Godongwana that is actually staying on the path of fiscal discipline. With us riding the wave of higher commodity prices and so forth, things are maybe looking up a little bit in terms of tax collection. That maybe makes things a little bit easier for Mr. Godongwana as he goes into February soon and then needs to deliver a budget speech. So we're still riding the wave, and I think it's continuing, and I think it will continue. So no reason to change anything on what we expect of the Rand at this point in time.
Well, we'll see if the IMF agrees with giving us a little bit of a sentiment boost. Their report on, I think it's a global report, is coming out either today or later this week. And then we'll also track the what I think is going to be a couple of tense meetings in Davos later this week, with the global leaders meeting there. But Andre, thank you very much for your time. And then we will catch up on all of that again next week.
Thank you very much.